The market volatility is here to stay, but the money's not gone. It's just moving around. Joining us today is Larry Benedict with the Opportunistic Trader. He is talking about the three sectors of the market and three stocks where all of that movement is flowing right now. Larry, before we get into those three names, let's just talk about all the volatility and really the chaos in the market over the past few weeks. There have been some tremendous, kind of historic moves in the market.
The markets have been absolutely historic. It's been probably in my 40-plus year career, the biggest move that we've seen in the shortest time, and also setting records with the NASDAQ having 14 consecutive or 13 consecutive up days. And here we sit at record highs in the S&P and the NASDAQ and all the broad indices, while we're still at war, still a lot of uncertainty, and the market has disregarded pretty much all risks out there, and here we are.
The market has disregarded those risks, but they are still there, and volatility can definitely still play a role. I want to talk about that a little bit. We hear from the bulls who say, well, this is just the start of an even bigger run. We're going to have a big bull run summer. It's going to be a great time in the market. This is just the start. You have others who say, don't trust this. This is just another form of volatility. Even though it's a swing in the right direction, it is just another form of volatility because those risks are still there. What's your take? And let's have you dive into some of those risks that could be market movers in the next few weeks ahead.
I'm in the camp that volatility is here for a while. I do not think the market is going to stay here. I think there's a possibility, depending on how everything plays out, that we may trend down to lower levels. Again, there's a lot of uncertainty in geopolitical land that people are not assessing, I believe, correctly, with crude oil being at $90+ for months and months and months, companies running out of jet fuel, airlines missing numbers, etc. So I'm in the camp that volatility is here. I'm not like ultra bearish, but I definitely think we're nearer the top end of the range. And, that's good for us at the Opportunistic Trader. We protect our subscribers and our clients in a way, and we participate both up and down, but we make sure that we're looking at risk first. And I think the market, by rallying 20% NASDAQ and 12-13% S&P, is posing a little bit of a risk. But again, bulls are in charge, bulls are in control. So we're not really fighting that, but we're a little bit leery that this will continue.
Yeah, I think expecting volatility ahead is absolutely right now. And whether the market moves up or down, there is money being made, there's money being lost, and there are winners and losers in the market. And that is what you are looking for, where that money could be rotating to next. If you want to take a look at Larry's program, the Opportunistic Trader, to help find some of that rotation before it starts, there's a special offer for the viewers in this video today to scan the QR code or click the link in the description to get that special offer on the Opportunistic Trader right now. Larry, today you are going to share three areas where that money is moving right now, really just over the last few days, and some specific stock tickers where that money moved in a really big way. Before we get into the names, tell me a little bit more about why we see this kind of rotation and money moving during a volatile market.
I've been in the business for 40 years, like I said before, even though I don't look that old. I don't know how it could be possible, but I've been doing this since I'm 21 years old, and we've seen this more prevalent in the last 5 to 10 years with algorithmic trading. We didn't see this back in the earlier days. Markets would be down on the day and pretty much all sectors would be down. And on an up day, pretty much most or all sectors would be up. So you wouldn't be looking at this, chasing the money or finding, hey, we're looking and airlines look weak, but autos look strong and, all these correlated trading. So now we're in a position, and we've been doing this for many, many years now, of finding ways to see where the money's moving, when it's moving and right before it's moving. And, we've been able to do that successfully at the Opportunistic Trader for 8 years to the public. For my entire career, I was never out to the public. I ran a hedge fund. Minimum investment was seven figures. Now we're able to provide information to the public and help people that really need the help. And I think that's key. And, we've been able to do this successfully, like I said, for 8 years. And we're seeing money moving now for sure. And we could go over where I'm seeing that right now.
Yeah, let's get right into that. Let's get into the three sectors where we're seeing the money move during this rally and, the week post the major rally. What's that first sector that we're seeing money moving right now?
Well, I think it's the most common sector that everyone loves, and it was actually performing pretty badly at the beginning of the year, and now is doing incredibly well, and that's the Mag 7 stocks, Apple, Microsoft, Google, NVIDIA, Amazon, Meta, and Tesla. Those are pretty much the makeup of that index, and we're seeing money moving into that sector in a massive way. That's the biggest flow that I've seen. That's been the biggest outperformance in this rally for sure, which has taken the NASDAQ to all-time highs.
Yeah, the money moving in this sector and the speed that it moved too really made this such a huge turnaround. Because, like you said, the Mag 7 were struggling for most of this new year. And so to see the turnaround so quickly has been a big boon for a lot of investors. Let's talk about which specific Mag 7 stock maybe saw some of the biggest inflows this quarter.
I would say it's actually the largest cap stock in the world. It's not a surprise to anybody. I would say 15 years ago, no one even knew what this company was. If you asked someone on the street, they would have never heard of it, but it's NVIDIA. And NVIDIA stock price went from like 185 down to 160 on the low 14 days ago. And in 14 days, it went from 160 to $203, adding trillions of dollars in market cap. So that's the big one. That's the one that I'm seeing outperforming everything. We've had a huge move. We expect more. There may be some consolidation at these levels, but, the stock is over 200 and performing very, very well.
Earnings is coming up for a lot of the Mag 7. We know NVIDIA kind of closes out the earnings season. Do you expect that to have any further impact up or down for this stock as well as really all of the Mag 7?
I think earnings will still be good enough to potentially move these stocks higher. I don't think any effect will be put into these earnings from the beginning of the war, even though the war has been going on for like a month and a half. So I think that most of the Mag 7 will escape. I think it's looking forward to the next quarter after this quarter that they may struggle a bit. But for right now, it's looking potentially fairly positive.
All right. Well, investors definitely saw all the money flowing into the Mag 7 right now. What's that next sector where we've seen a lot of that rotation happening during this rally?
We're seeing rotation into housing stocks. We've seen that in a fairly big way, and we think that that can continue on. We think there's a big change that people are not really looking at right now because really everyone's looking at today's action and the war, etc. But I'm looking at the changing of the Federal Reserve chairman. Okay, which I think is very, very important to the market. And Kevin Warsh will be stepping in. Hopefully, if we have Donald Trump step down a little bit on pursuing Powell, because that may hold things up. But we're expecting that change in the next month and a half. And we think he's going to be very, very favorable for lower interest rates. And we think that that will cause a boom in the housing market, and we like that sector. I kind of like that sector right now a little. It's not as exciting, but a little bit more than Mag 7, which already had a massive run. That's the second sector that I'm looking at right now.
Yeah, let's talk about specific stocks here because some stocks in the sector saw that, 15-20% jump in the last couple of weeks already with the rally. Which stock are you looking at specifically in housing?
Well, we like to, with the opportunistic trader, we like to focus on sort of the biggest stocks in the sector. We're not looking for a small stock that may have trouble. We want to express our view in that particular sector by doing it in the top 1 to 2 stocks. So, I mean, you could do it in Lennar or Pulte Homes or Toll Brothers, but we'll do that in D.R. Horton, the largest market cap housing stock. But it's really reflective of the housing sector. But we feel like you can get the best bang for your buck for most sectors by doing the largest stocks.
That's a good specific stock to look at. I want to talk about comparing sectors here a little bit. From the Mag 7, it's really the AI story in most of the Mag 7, especially NVIDIA. We know we've got backlogs like crazy for NVIDIA and other chip makers out there. So we know the orders are coming in there. I'm wondering, is there even more risk when you look at the housing sector, the building materials sector? I feel like there might be more risk there because so much of those contracts and the orders that come in there are really dependent on what's happening in the economy, on those decisions like you're talking about with interest rates and things like that. Is there maybe even more volatility potential or risk potential in the housing sector?
It could be possible. Obviously, you're having, the Strait of Hormuz is closed and shipping is being affected around the world. So maybe on the product side a little bit, but I think the interest rate side is going to spur massive demand. And I'm in South Florida, and what I'm seeing here, I have never seen. And I've lived here for over 30 years, and I keep saying, oh, it's going to slow down. It's going to slow down. And it's expanding. In the town that I live in, they're putting up 20 high rises. That they didn't have before that are in process. I think this is a boom. It may be related to region. Some regions may struggle, but we think the slack is going to be picked up by, Texas, Florida, etc. I don't think the tri-state area is going to expand anytime soon, but down here it's a full out boom.
It's a kind of another rotation happening in the real estate market across the US, just like the market rotation that we're talking about in this video. And again, what we're talking about in these sectors today, you've got one more sector to cover, and this one is a really interesting one. But these are sectors where the market has moved just in the last few days and weeks. But your program at the Opportunistic Trader is all about trying to find where that money is moving before it happens. Again, I've got that QR code here and a link in the description if you want to take advantage of that special offer for Larry's The Opportunistic Trader and finding those rotations happening before the money moves there. Let's talk about for the average trader out there, again, before we get to this third sector, Larry, when money has already moved into a sector, if you're the average retail investor or even just a trader too, which I know is your specialty, do you want to look at the sectors where the money has already moved, or do you want to be looking elsewhere? How do you usually play that?
We do both, so we're always looking for what we think will be the next sector to come alive. The last sector is a sector that I've really loved. It's actually been beaten down into this. And as you said, it's only really recovered in the last week and a half. Comparing this to the Mag 7, I think there's a lot more room in this sector, the software sector, to move up. My favorite stock in that sector is Oracle. I love that company. I think that company's been beaten down. Yes, it's rallied off the low pretty decently, but I think there's a lot more room to run here. And I think the market has misjudged, what these companies can actually do. And they're very worried about, CapEx and all of this stuff. But I'm looking at market cap of Oracle, and it's very, I think, very low relative. And it's come in a lot.
Right. Let's talk about that a little bit more in the software sector. Oracle's a great example of a company that's up 20% in the last week, but it's still down so far off of its highs. And I think investors who are holding Oracle, especially, but other investors too, are wondering, when will Oracle get back to that all time high? It still has a lot of ground to go to recover those all time highs that it had just a few months ago.
Absolutely. I mean, it's been in a down spiral for probably 6+ months. And I think a lot of that has to do with spend and how many deals they're doing with OpenAI and all of these other AI companies, which originally, when they did these deals, the stock rallied to an all-time high and almost had $1 trillion market cap. And their market cap bounced, like you said, a little bit, but it got down to a couple of hundred billion for Oracle, which is, I think, a mainstay name that you could stay in for a while. Again, listen, it could be a little turbulent, obviously, because the market may correct a little and you got to withstand that. But I think these names are undervalued right now. I can't say the same thing for Mag 7. I think Mag 7, can rally a little bit, but they're definitely fully valued or almost fully valued, whereas these stocks are not. And they're operating in the same playing field as the Mag 7, and they're aligned with the Mag 7 with software. So we really like this sector. Again, it's going to be bumpy. It is definitely volatile, but we like this sector a lot right now.
You're talking about bumps, but it sounds like you've got kind of a long-term positive outlook on continued growth for software. But I want to look at the bull side, the bull case for software stocks, and that argument that AI is going to take over the need and demand for what these software companies have to offer. What's your take on that long term? Do you think it's too early to know for sure? I know you're looking at the value of these companies right now, the PE. You're looking at how many contracts and the money they have coming in today. Do you think that could change long term as we start to see more of that AI impact?
It can. It definitely can. And it's definitely a worry. And again, AI, I'm kind of old school. So, like, I think they say AI to everything. Like, I go on Google on my phone and they're like, you're using AI. I'm like, I don't know. I was doing this before you ever had AI? So, I don't know exactly, how this is going to play. I traded during the 99 2000.com bust. So it's possible, stuff can happen like that. I just think the numbers that we're talking now, so astronomical. Like they're like a trillion here, a billion here, 50 billion,
Right.
So OpenAI has contracts for probably trillions of dollars and they probably don't do any real business. So I think a lot of it is on future of what may be. But again, a lot of what we do also for people out there is we use options. So when you use options, the fallacy in options is that options are more risky and all of that, and it's the opposite. So I could define everybody's risk. We know what we're risking. And it's a safer way to go about doing these trades. Because like you said, who knows where AI is going to be a year or two from today? We don't know. So most important thing to me is to keep our subscriber base safe. And we're trying to do that.
Safety is a great goal to have for your subscribers, especially in this kind of market. But it's not the first time we've seen this kind of volatility. Like you said, you've been around since the dot-com days. We saw a ton of volatility, especially in trading at that point. And that's when that PDT rule came around. But just this week, we talked about that new announcement. That rule is going away after 25 years. I'd love to get your take before we close up the video about whether this is a good thing for investors or potentially a risky thing.
I think it's good that people can trade with not a lot of capital, but I also think it could be a negative because if they're getting under the 25,000, dollar mark, that they probably are using all their money, and it's not a wise investment or a wise idea to use all your capital just to day trade. So I like that you can do it if you like. because you don't have to fund an account with 25,000. And I think it gives everybody an entree into the business. But I want to just make people aware you don't want to use all your money because that's going to put you in a bad situation. So as far as the rule, I think it's a good change because they shouldn't have that rule. It's nonsensical. But I also think that if you're trading with a $5,000 or $10,000 account and it's all that you can fund with because it's all your money, might not be a great thing to do.
Clearly, safety is your priority. That's always a good thing, especially for your subscribers. Thank you for sharing your take on this and all of the stocks that we talked about in the video today. If you want to hear more about that PDT rule change and the stocks that could benefit, make sure to watch this video that just released this week with Jeffrey Neal Johnson. He talks about 5 companies that are set to benefit from this big rule change.